Well, hello there everyone. My name is Bruce Bradbury, and today we're going to be taking a look at a new video that Umar just posted called 8 Trading Rules to Become Profitable in 2024. I wanted to watch this video together with you all because I'm sure there's tons of valuable information for us to watch together. And look, I've even got my tablet, so I'm going to be taking notes along the way, and at the end of the video, I'm going to be sharing, the notes and insights just that I had in particular. Everyone can, of course, draw different conclusions from what Umar is probably going to present in today's video, and I'm just going to go over what I learned specifically and come in with my feedback every time I kind of am interested in something that Umar brings up in this video. So without further ado, let's get started and start the video.
Becoming a successful trader is a marathon and not a sprint. Now, a lot of people that try to become successful, they try to rush the process or they cut corners. Now, in this video, I want to talk about things that you must do in order to become a successful and profitable trader. The first thing, which is the most important thing, is have a playbook, have a strategy, right? You need to have a well-defined system, well-defined edge in the market that allows you to make money. If you don't have this, it will make it very, very difficult for you to be profitable. So in order to develop a playbook, you must do the following things. Number one, you have to identify the market criteria where this playbook or strategy will work. Number two, you need to have entry and exit rules for this strategy that tells you that based on these criteria, you can enter or exit. Now, once you have these rules early on, you have to understand that the rules will not really make sense. You don't have real backing for these rules. And in order to back these and make sense of them, you must backtest. You have to backtest the strategy. You have to backtest the rules. You have to refine that system.
I like what Umar tells us about having to define take profit and stop loss, having to find entry and exit. Once I get into a position, where do I sell? What do I sell for a stop if it's a losing position? And when do I take profits if it's a winning position? This has been absolutely crucial for me. In my first year of day trading, I have had mixed success. However, most of my failures have just come from simply not following my stop loss on an easy trade. So very interesting what Umar has to say here. Defining that stop loss has been, crucially important to me, and if only I could follow my stop loss every single time. But hey, we're working on that, so we're going to be better traders in the future, just trying to get that psychological barrier under wraps of, hey, I've got to actually hit this stop loss and actually sell my position 100% of the time, or I'm gonna go on tilt eventually and, get messed up at that point, okay?
Once you backtest and you refine that system, jump into trading with small size. I know everyone wants to make a lot of money when it comes to trading, but trust me guys, start off with a strategy, 1 or 2 strategies, not a lot. Build that strategy, build that playbook with criteria, backtest it. Once you backtest it, go with the real account with very minimal size so you can build confidence, build experience in the markets, and just see what you need to tweak in that playbook or strategy to actually allow it to get better. And with that strategy,
absolutely folks, and on the channel with me personally trading and what you're gonna see live, we're gonna start trading with only 2 options contracts at a time. Okay, we're gonna get comfortable and we're gonna be focusing more on repetitions than just making money. I wanna see if I can, out of 100 trades, have a really good set of metrics that tell me, wow, this set of trades was really, really good. That's what I'm focused on. I'm focused on maximizing all of my metrics, whether that be, day win-loss ratio, that be per trade win-loss ratio, that be the amount of R multiple that I'm capturing in my winning trades on average, right? Different metrics that can tell me about how my performance is doing, whether I'm lacking in a certain area that I need to improve upon. This is what I love about Umar so much that he's taught me on YouTube through his videos is it's all about the data, right? The stock market is all about following the math, following the probabilities of what could happen and executing on those probabilities to essentially trim and take a little bit of money out of the stock market and be a successful day trader. So I really love that about what Umar has to teach. And back to the video.
Strategy or playbook, you have to make sure you stay consistent with it, right? So a lot of traders I see, they develop a strategy, but they change it every day. They don't have clear criteria. They don't have clear use cases for that strategy that makes sense. They're adjusting every day depending on how they feel or what they feel, right? And that's not what you want to do. You want to have a clear-cut system that is well tested, that is defined, and then use it. The next thing is journaling. Now, I know a lot of people hate the concept of journaling when it comes to trading, but I promise you that journaling and tracking your data is one of the most crucial aspects of becoming a profitable trader. You have to have your stats. You have to know what strategies are performing well, what days do you perform well, what size you perform well under, what time periods you perform well or bad under.
I don't know if you guys know this, but Umar actually created TradeZella, the platform that we use on the channel, TradeZella, to track all of our trades and monitor how we're performing, was created by Umar. Umar's a very successful trader. He's probably made close to $20 million throughout his career, I think 10 years or something like that. And on the side, created this entire platform to be able to track his own metrics and improve his own strategy. So I really love the platform. I use it constantly. Every single trade I track with TradeZella. This is where I get all of my data from.
You have to understand what is causing you to go on losing streaks. How do you respond on losing streaks? How do you respond on winning streaks? Without that data, you can't really fully maximize your trading capacity, right? So for me, it starts off with having a proper detailed pre-market game plan. It starts off with me recapping every single trade that I've taken, what I did well, what I did wrong. Maybe I sold too early. Why did I sell too early? What did I see? What did I miss? How can I improve? And guys, keep in mind, trading is a game that we are constantly looking to improve day over day, year over year. Even me, I've been trading for 10 years. I'm still tracking my data, I'm still journaling, and I'm still looking to get better, because there's never a moment in trading where you get to a point where you're like, okay, I made it. I still haven't gotten to that point where I feel like I've made it. And that's something you have to keep on your mind, right? That trading is something where you have to keep going. There's never that point where you get at the top of the mountain or top of the hill. You have to keep refining the system, keep updating, keep improving. And the moment you stop, the losses will catch up to you. Now, if you want to start journaling, I have a link down below for TradeZella. Check it out, get started. If not, just start journaling any possible way you can and take it from there. The next one is stop focusing on your P&L as an indication for success or not in the markets. I see a lot of beginner traders, or traders at all. They'll say, well, this month I didn't make a lot of money, so I traded bad. I had a red month or a flat month, so I'm a terrible trader. And I tell traders that don't take your P&L as a measure of your success in the markets, especially when you start out.
I really agree with that sense, because let's just take me for example. Year to date, and I'll give rough estimations here, I don't know the exact numbers, but year to date I'm probably down about $25,000. It's my first year trading. I consider it education, whatever, okay? In the month of October, I made about $3,500 approximately. In the month of November, I lost about negative $1,500. Does that mean from October to November, I became a worse day trader? No, and in fact, I feel like I actually learned a lot of new content about trading. I feel like I'm a much better trader than I was in October, even though that didn't show up in my P&L in November, right? So I think what's amazingly crucial for us here is to not even care about our profits. Think about, if I care about my profits, you know, am I splitting my attention? Am I splitting my attention not just looking at the charts anymore, but looking at my P&L, considering how far I'm up or down on a trade at any given second? It can really form a toxic relationship for a trader, and I consider not even looking at my P&L during the day when I'm trading, not even really trying to think about my profitability, but just focus on that model, because if we can leave as much psychological baggage at the door when we're trading, that's gonna be better for us. But then constantly looking at the money, that's gonna have an immediate emotional trigger for us all. I know it does have an emotional trigger for me, because I am money hungry and money obsessed, like most of us out here. So that emotional trigger of oh shoot, snap, I'm down $400, you know, on the week so far. Okay, that could affect my trading psychology. So I just want to leave all that psychological baggage at the door, and it would probably even be easier hiding my P&L for an entire year and not even looking at how much I'm up or down, just focusing on those trades.
And the reason for that is you're not going to find consistency in the markets for some time. And that's a given. It's going to take you time, right? Because you're not going to find consistency, that consistency will not represent in the dollar value of results. Like you won't have a 10K month, a 12K month, a 15K month, and so on, right? But what you can do is you can start measuring other aspects of your trading that you're allowed to say, well, I am improving. Well, I am improving in backtesting. I am able to find a strategy that has a 40% win ratio. Well, now I've improved it to a 50% win ratio. I have gotten my win to loss ratio from a 2 to a 2.5. I have gotten better at cutting my losses. I have gotten better at allowing certain trades to run. I have gotten better at defining pre-market movements, or the game plans that I had, they are working a lot better. If you start shifting your focus onto things that you can measure and that aren't P&L, focused on the systems, and it allows you to focus on just getting better. And if you do that, within some time, the money will automatically show up. My favorite one, risk.
Hey, it's Ryan Reynolds, owner of Mint Mobile.
Oh,
It's the holidays,
buddy,
and
Ryan
big
Reynolds,
wireless
thank you.
companies
Merry
are busy
Christmas.
spending
Thanks for
billions
joining
on advertising.
us today on our
Mint,
stream,
we're
on our
not even
video.
wasting money.
All right,
We
see you
bought
later.
this
Bye,
sticky
Ryan.
stock.
Keep your risk consistent. Risk is the most important part of trading, guys. It's something that we have to keep in mind. If we want to become profitable and successful traders, we have to control one of the things that we have control over, and that is risk. How much risk do we put on each trade? How do we stay consistent with risk, especially starting out, right? Because starting out, our main goal is to stay alive as long as we possibly can, right? We want to be able to put on as many trades as we can with.
This is very important, focusing on the long term, and this makes it possible. It means that we have to develop a criteria of our per trade parameters. So as simple as possible, say each trade I'm gonna use $1,000 and my stop loss is gonna be 10% or $100. So if I'm wrong on this trade, if I'm wrong on any given trade, then the worst amount of money I'm gonna lose is $100. That's what I'm gonna stop out. I can always sell even before my stop loss if the trend doesn't look like it's going in my favor. However, that's also another key point: be patient. Be patient with the trade. Let it play out, okay? Just because it hasn't, spiked up in price immediately after you bought it, doesn't mean that it's not a good trade. You obviously have to be patient, and you have more like often than not have to be patient with your winners. Now, Umar and we both trade options. I'm learning options. Umar is the master, the grand master teacher. But what I'm trying to get at is the gist of being consistent with those amounts, okay? If I know that, okay, I'm gonna take 100 trades this month, and each trade has defined risk parameters of losing only $100 per trade. However, my take profit is, my first take profit, the trim position where I take half, is $200. Let's just say 20%, okay? So with that R multiple, with that, ratio of having more profits than having losses, even with having those losses, it's literally baked into the model to have losses, okay? But just playing with those numbers and making criteria for saying, okay, as long as I just stop out here, it doesn't matter, if I lose this trade, because I'll make it up in the next few trades, right? Coming up with that sequence of events and planning out for consistency in the long run,
without having massive drawdowns or massive blowups in our account. So in order to do that, We keep our risk consistent, we keep it minimal, and we keep it going for a really long period of time until we allow ourselves to build confidence. So I have a video I'm going to post up here. It's a whole risk video of R multiple, how to position size. I highly recommend check it out and just focus on the risk component of trading. The next thing to do is have a pre-market game plan before you take on any session. You need to have a routine. You need to have a system before every session. So every time before I take any trades or I start my trading day or session, whatever the case may be, I am looking at a game plan. I am building a game plan based on my hypothesis, based on what I believe are the possibilities that are happening in the market. I'm aware of all of the economic events that are happening. I'm aware of all of my key levels in the market. I'm aware of yesterday's movements, upcoming events, and so on that may possibly move the market. And then I also allow myself to get in the right state of mind. So I have to do this 20 to 30 minutes before the market opens or I start my session. So once again, so I can get in the right state of mind, I have an idea of what I'm doing. What you should not be doing is you should not wake up, first thing you do, open your laptop and put on a trade. That's not the way to go, guys. You want to make sure you have a well-defined plan. You want to make sure you're in the right state of mind and you are active to be able to put on trades and be able to think properly. And you should make a rule, and I've had this rule for a really long time, where if I'm not in front of my computer 30 minutes before with the following items, I'm not allowed to trade for the day. And because we have no boss as traders, which sounds cool, it also has a flip side because there's no one to hold us accountable and no one to tell us, hey, you can't trade this day, or hey, this is wrong.
That is so true, Umar. Seriously. Look, I've been working for myself, okay, having my own businesses, being a real estate agent as my own career, and now being a full-time trader. I literally don't do anything else. So for having my own self for accountability, I literally don't have anyone else. I don't have a boss that tells me, hey, you need to be in your chair at 6 a.m. and you need to be trading and you need to be doing all this pre-market prep. So Umar is precisely right about accountability. It is crucial that you remain, diligent with yourself and have standards for yourself, even though it can be hard, right? I push myself constantly. Things like, oh, I've got to remember to go to the gym today because if I just forget about it, I'll just never go to the gym. Or, I've got to remember to be in my desk on these hours, set these timers. There's a ton of different helpful things that you can do. But that is another big thing about trading that just makes, adds to that level of complexity is psychologically, it's way easier for us humans to just take orders from someone, feel like we're accountable to someone else. Oh, I don't want to let my boss down. I don't want to perform badly at my day job, right? There's a risk of failure there. There's a risk of my peers knowing that I'm not performing well at my job. In trading, you don't have peers. You're by yourself, essentially. This is why we have the YouTube community, to kind of try and branch us all together here. But one final thing that Umar notes here, it's just insanely crucial to develop that sort of plan. So let's get back to the video.
Just kind of, go on tilt and go crazy in terms of just putting on trades that don't make sense. And if I have 2 losing trades, I'm not allowed to increase my size. If I have 3 losing trades, I have to take a step back. When you set these rules and you follow them, you now allow yourself to be aware of what is happening in your trading. You don't allow yourself to go on massive drawdowns or, go in massive tilts where you allow yourself to blow your account. So set these rules. And the first rule it should start from, in my opinion, is your pre-market game plan.
That is insanely true, because what Umar is telling us here is that we need to be prepared every time that we go into a trade. Every single time that we go into a trade, we need to be prepared. And I know it's crazy to think that when you're actually in the trade, it could take only 5 minutes. In 5 minutes, if I'm taking an options trade with a size of only a few $1,000s, I could be up 20%. So I could have made, $500 in just 5 minutes in the day. So because that timeline is so short when you're actually in the trade, the actual trade can be a very short time frame. You could even be scalping, right? There are multiple methods here, but it kind of lets you feel like psychologically, oh wow, in 5 minutes I made $500. well, I only have to work 5 minutes a day. I guess I'm good. No, you're not good, because you need to be prepared. It's at 5 minutes, but there's a lot more. There are hours of preparation beforehand. There are hours of trade analysis that occur after the fact. That 5-minute trade is actually, 5, 6, 8 hours of work to ensure that you are entering only the most confident trades so that you remain profitable. If you just go into a trade, I've done this, obviously. I've done this as a noob trader. I've just woken up, I've looked at my phone, I've not even gotten the laptop because I can trade from my phone nowadays. I've gotten my phone and I've looked at the chart. I haven't really done analysis. No, I haven't done analysis whatsoever on it. I look at direction, I say, oh wow, you know what? It looks like it's going up. I'm gonna buy. Terrible approach, and terrible, because you're just going in there blind at that point. So it's really can make a messy situation.
Attention to everyone else on social media, especially the traders. Stop it. It is destroying you. It is very easy to go on YouTube, go on TikTok, go on Instagram, and look at other traders posting these crazy gains and say, well, how do I get there? I need to get there. I need to do this. I need to increase my size. And what that does is it just puts you in a state of mind where you start taking very stupid trades. Ignore all the outside noise, right? Just stop paying attention to all the social media nonsense with traders and so on. And if you need to get off, get off. Because when you start paying attention to multiple people on social media, you start looking at different strategies, different ways to trade. You're like, well, you know what? This guy did this, so I'm going to copy them. Well, today,
I had a question last night. I was talking to a friend, and the friend asked me, oh, what's your trading strategy? And I'm explaining the whole thing. I try to condense it down to less than 2-minute elevator pitch because the layman really doesn't care. It's really boring for a lot of people when I end up explaining. But anyway, she says, do a lot of other people trade like that? How do you know if that's the right approach? Okay, essentially, and it had me thinking, every single trader that I've seen online on YouTube, Umar, Jay Dunn, others from the Team Bull trading community, Ricky Gutierrez, Andrew Diaz, Stock Market Wolf, they all have different trading approaches. They all have different approaches. In the end, it boils down to day trading is just having an edge in trying to find a place in the market where you can scalp a little bit of money out of it, right? So every trader seems like they pretty much have their own system, which makes it really important to not just follow along with a trader, not just follow along with someone who has a stock trading course, because what you can learn from them is how they think and how they approach situations. But what you shouldn't be learning from them is to just copy them. If you're just copying, then you're not getting the essence of what's actually occurring there, because every situation in the stock market is unique, right? We can follow patterns and chart things out, but every single situation in the stock market is unique. So if you just are copying people's trades, then you're not going to be gaining those critical thinking skills in how to actually approach unique situations in the future so that you can do it yourself and not have dependence on other people, especially YouTube day traders. If you're in courses, and I'm in a lot of courses, I'm in Jay Dunn's Team Bull course, I'm in Ricky Gutierrez's day trading course, I'm in a lot of courses, and I listen to these guys constantly, but it doesn't mean that I'm following word for word everything that they're saying or that I'm following their trades. No, in fact, I'm just trying to figure out how they're processing what's going on. And that's where I gain value.
Hey, this guy did this, so I'm going to copy them. So it doesn't allow you to build your own path. And it also builds like this FOMO within yourself of seeing other people make X amount of money or X amount of success. And it forces your hand to take bad trades. And also stop paying attention to so many different mentors that have different trading styles. Find 1 or 2 trading styles that make sense, that you like, the way you like to trade, and stick to consuming content around that. If you consume content.
That's another thing, folks. I was talking to a friend, and the friend asked me, oh, so do you trade a bunch of these, a bunch of stocks? What do you trade? And I just said, no, I just trade the S&P 500 index. One thing I trade. That's the only thing. You say, oh, you don't trade other things like, I know AI stocks are hot right now, or, and I said, no. I focus on a single thing. And I said to her, stock market opportunities are endless. There's opportunities everywhere. And every stock, every chart behaves a little bit differently. So why am I gonna wanna try to spread myself thin trying to play the S&P 500 and then trying to play Nvidia and then trying to play Apple and then trying to play some, random penny stock that has had a 150% gainer overnight, or some biopharmaceutical stock, some penny stock? No, I'm not gonna be trying to figure out all of these different companies. There are thousands of companies on the stock market, and each one of them presents opportunities. However, most of them are duds because not a lot of people are trading them. The number one thing that you want to look for is liquidity and trading volume. Why do I trade the S&P 500 versus any other index? Well, there are a lot of people trading the S&P 500. In fact, there's a ton of volume, a ton of liquidity in the options chain. So I can get in and out of positions essentially instantaneously because there's just so many people trading in and out of the S&P 500 and of the S&P 500 options chain every day that it makes trades super easy. If you're trading some illiquid penny stock, you can get totally roasted on just essentially on the bid and the ask spread, which is a no bueno. It's a no good deal. I don't know Spanish. That was a little lame. Sorry about that, folks. But anyway, let's continue with the video.
And
this is fun.
Everything, you want to allow yourself to become super great at one way of trading, one style of trading, and so on. And I'll tell you guys, 99% of things that you see on social media, that you see on YouTube, especially in the trading space, is nonsense. It's not real. It's not real. People are feeding you bad ways of trading and feeding you complete utter BS. And it's very easy for that to create this illusion of I should be doing this, or I should be able to be profitable in 2 months or 3 months. It's not the case. Stay in your lane, give yourself time, increase your time horizon, and just allow your journey to be your journey. Own it, and just be patient with it. And I promise, if you don't cut corners, if you don't go all over the place, and you stick to the game plan, you stick to improving, you don't look around and just trying to make money, you will eventually get to a point of being profitable, and you will get to a point of being successful in this field. The last one is getting out of fantasy land. It's very easy for us as traders to go into fantasy land and think, if I was to buy here and I was to sell there, I would make so much money. And I would love to say that's true, but it is far from the truth, guys. The truth is, trading is very hard. And I've said this countless times, right? Trading is very difficult. There's very few people that will make it in the game of trading. Now,
have you ever met a day trader in real life? Let me ask you, have you ever met a day trader? What was their P&L like? Were they a day trader that made $100,000 a year? Or were they a day trader that made $1 million a year? Or $2 million per year? The question is, how many day traders have you actually met in real life that are making, say, $1 million a year? My guess is you've probably met zero. You probably met no day traders before that are making that amount of money. Now I'll ask you, how many doctors have you met? Now, there are really specialized doctors that make $400,000, $500,000, $600,000 per year. There are a lot of doctors that make $600,000 per year, and chances are you've probably ran into a few of them throughout your life. So what does that tell me? Well, supply and demand, that tells me that there are less day traders than doctors, okay, comparable incomes, meaning that it's probably statistically easier to become a doctor than statistically it is to become a profitable day trader. And I'm talking about statistics, right? So what Umar is talking about is give it the respect, give it the time, give trading the effort that it requires to be successful. A doctor, an MD that makes $500,000 a year is going to school for 12 years to be able to do that craft, right? Whether they're a heart surgeon or a brain surgeon or something very complicated. Now, we're day traders. If we think we can just walk into a situation and make $500,000 a year by waking up late, getting on our phone, checking the stock market, just buying willy-nilly, not having a system, not having an approach like everything Umar is talking about in this video, you're gonna get absolutely roasted. You're gonna get screwed here on the market. Give it the time and the effort that it deserves, right? I've been trading for 13 months. Now, if I consider that, okay, it takes a doctor 12 years to be able to get in a position to make that amount of money, well, I'm only 1 year into my trading journey, okay? It could take me 10 years, but if at the end of 10 years, I'm making $1 million a year or some astronomically high amount, then it's all worth it in the end, isn't it? So just a little bit of tidbit rant advice that he had me thinking about when he said that. So let's get back to the video.
From a competitive point, I want trading to be competitive. I want it to be difficult. I enjoy that it's difficult. What I'm saying is the more difficult it is, the better the reward. So if you are in your trading journey, realize that it is going to be difficult. Be mentally prepared. Know that, hey, this is going to be difficult. Very few people are going to make it. These are the things that I must do and I must stick to. And I have to be able to not only conquer the markets, I have to be able to conquer myself. And I know you guys have heard psychology. It's a very big part of trading, 110%. And you need to understand that in order to be successful, there is a component where you have to conquer yourself, but you also have to have a strategy. You can't.
Yeah, really interesting how big of a role psychology plays in trading. If you think about the stock market, it's just this place where mathematical setups and probabilities are occurring all the time. And it's unique and random all the time. There's no rhyme or reason to what's going on in the market. A lot of people say that the market is totally random. However, psychology is still a major factor into you being a successful day trader or not, which is interesting because your psychology, your thoughts about what the market is going to do has absolutely no effect on what the market, in fact, is going to do. So it's a little paradoxical there. However, you're a human being, and you've got to remember, you're dealing with this uniquely random situation, looking at the chart every single day. You need to get your psychology under wraps and understand that the human brain just doesn't think probabilistically. The market behaves that way. So you've got to kind of even rewire your brain a little bit to become a successful trader, because it doesn't work like how it works in real life. In real life, if I just, get a job working somewhere, the harder I work, the better I look to my peers and the more progress that I make in my career. And, theoretically, the higher up that corporate ladder I climb. In day trading, it doesn't work that way. The harder that I work, and I'm saying when I'm in a trade, if I'm in a trade, there's no amount of mental exercise or, psychological theorizing or modeling that's going to make sure that that trade becomes, a better winner than it could have been if I weren't projecting all of those thoughts. It doesn't work that way in trading. The simple fact is, trading is just finding a good setup and acting upon it. There's no hard work or discipline or psychology when it comes to actually being in the trade. So I think that it really helps us uncover that we just need to be stern, be merciless during our trading, and we'll win out finally.
They both work hand in hand. Conquer yourself, make sure you have a good defined strategy, put those two things together with the element of protecting your downside, which is risk. Do it for months and months and months and months consistently, day in and out. And once again, when you look behind you, you'll see how far you've come, and you'll see how your P&L starts reflecting that. With that being said, I hope you guys all make it as profitable traders in the upcoming year, and I wish to see every single person watching this succeed. Thank you so much for watching, guys.
Well, thank you everyone so much for watching this video as well, a reaction to Umar's video. I had a lot of fun, and I will see you in the next one. So have a good day, and take care. See you. Bye.